Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, April the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. As you can see here, /CL, trading slightly in negative territory, was in positive territory earlier on today, up into that 44 handle, but it's kind of slowly started coming off. News is out that Kuwait is basically ramped up to their 3 million barrels a day. Remember, they had cut that back to 1.1 million barrels a day due to the strikes in the oil fields. Now they're ramped back up. I think the last I saw was 2.9 million barrels a day. So right there at their maximum production for the most part, which is, I think, capped at around 3 million barrels a day. So moving on to the data that we've seen today, we did get Philly Fed manufacturing index came in at negative 1.6%, was expected a positive 8.1%. If you remember, the real surprise last month was the 12.4, which was a major jump in that manufacturing index. Came in well under expectations today at 1.6%. One nice thing was to see the unemployment claims dropped to 247,000 versus the expected 260,000. So, it's widely looked at, but it could be seen as people just aren't filing for unemployment. That's the people filing for unemployment claims. So it doesn't necessarily mean there aren't unemployed people not looking, and it doesn't really show if those people that did find a job are underemployed in a sense where they used to have a full-time job and now are working part-time. So it can be skewed, I should say, just a little bit. Onto the equities. As you can see here, /NQ, which is the NASDAQ, still hanging just above this point of control that I've talked so much about, where the most time and volume has been spent. NASDAQ down 11 points, but touching that value area and popping off of it just a little bit. On the E-mini S&Ps, /ES, very close to their lows of the day, down 8 points. Right still at that point of control for the most part. The volume is just slightly higher than the time spent. So we are right there, like I've talked about. As you can see here, we just touched off of our lows of the day. The E-mini S&Ps on a 15-minute chart down 8.5 points, but on the lows for all intents and purposes. On to some trades that I've done with these earnings setups. Biogen, which is ticker symbol BIIB. I talked about this yesterday in the daily market commentary that I was going to be looking at doing a strangle around this. And I had on the April 4 weeklies and sold the 237.5 puts, and then also sold the 292.5 calls. I originally collected $1.90 for that, was able to buy it back this morning for 30 cents. I covered that right on the open, you guys. So that's part of the rules of these, is trying to get out of these as soon as I can on the opens for the earnings trades. And then on to Qualcomm. Again, I went around this strangle. One nice thing about these earnings, although we've seen really low implied volatility, which is making it very difficult to put on a lot of earnings calendars or earnings trades, we are seeing these moves be inside the market maker move. So most of the trades that I've been seeing are inside that predicted market maker move. So although we have smaller implied volatility percent, the higher implied volatility percent usually increases those premiums, which makes that market maker move a little bit bigger. Although we're seeing a tighter range on these market maker moves, we're seeing that they're still staying within that range, which is nice to see. I was a little worried that because they weren't expecting a lot of volatility, we could see some happen afterwards, which would not be very conducive to selling naked strategies, but it's working out nicely. And with Qualcomm, I had on the April 4 weeklies and sold the 49.5 puts and the 55.5 calls. Originally sold them for 62 cents and bought them back for 15 cents. And as you can see, we got that volatility crush, despite the fact that it was pretty low implied volatility going into that binary event. And then with LUV, Southwest Airlines, this I had as a trade well back back in here. We did this webinar on earnings calendar setup, so setting up for the next earnings cycle when there wasn't a whole lot of going on. Volatility was pretty low, and I expected volatility to ramp up going into that event. As you can see, we did get a bit of a volatility increase, but it did come back off, which hurts your longs in that. But what happened in this one was I had on the April 1 weeklies with the April 4 weeklies with and it made it a 45 call calendar. And I originally paid 75-cent debit for that, but I was able to roll out those April 1 weeklies that I was short into the April monthlies and collected another 50-cent credit for those, and that was like on the 29th. So then I had on the April 4 45 call calendar, and I essentially had that on for 75 cents originally, got collected another 50 cents, so now I only had that long call on for a quarter. Well, I let the April monthlies expire. They did expire in the money, but not enough to have somebody assign me on those. So I ended up getting out of those. I did still participate on the upside because I had on the long April 45 calls, the April 4 weeklies 45 calls, and originally paid for those 45 calls $1.20. Collected another 50 cents for those over the course of the time. It did go against me. So all in all, I ended up making about 70 cents on the overall trade. So I covered those April 4 weekly 45 calls for $2.95 today, and originally paid $1.20 for it, but the other calls kind of went against me. So the further duration rallied more. Now today, going on to what we're going to be looking at today, we got Microsoft, we got Google with the L, which is Alphabet, we got GE, which is really low implied volatility. GM came out, but we have GE coming out, and if we look at these, I don't have anything on in these, but 4% for GE. I mean, there's some of these stocks going into this earnings trade. I've never seen the implied volatility so low going into a binary event. It's just it's pretty remarkable. Starbucks 31%. You know, we could see that come off a little bit, so that's going to be really. Usually I say 50 IV percent, but I've been bending the rule a little bit, going down to a little bit lower than that. As you can see here with Starbucks is 31. Caterpillar we have coming out also. Cat 48. So probably going to play Caterpillar. We got Schlumberger, ticker symbol SLB, coming out, and 26%. That's going to be on the very low end of what I would even look at. We got Visa, 28% also. And then what else we have? Tomorrow morning coming out. Those are the ones that are pretty much coming out this afternoon. Tomorrow morning we've got American Airlines. AAL is the ticker symbol 24, you guys. I mean, this is really hard We just looked at GE, I think, 4%. I mean, it's pretty remarkable. All right, well, tomorrow we're gonna be doing a webinar on the straddles. We just did one on the strangles, which wasn't really necessarily for the earnings trades. A little bit similar, but where I pick my strikes is usually a little bit different, and I take into account a couple of other rules with those. So check this out for tomorrow. We got the straddle with these markets that are moving sideways. We're going to try and find a couple of stocks that we can get some premium, or a couple of indices that we can sell some premium in those. And if we continue to get this sideways market with volatility coming out, these will be able to be quick hits. So check that out. That's all I got for you today. If you can't take that, take it easy.